Good morning, everybody. So in this video, I'm going to go over how the CPI report is affecting the bond market, which could affect your fixed interest rates. I'm also going to go over some news in oil. Now, before I continue, I got to get into this habit. If you like my content, please subscribe, like the video, comment. I'm a mortgage broker in Ontario, so if you do have any mortgage questions, feel free to reach out. My information is in the bio. You can book a free consultation anytime with me. So let's get into the CPI report and bond yield. So yesterday, as I went over, the CPI report came in a little hotter than expected, and core has been steadily increasing, which has caused our bond yields to go up. Bonds trade based off of inflation expectations and growth expectations. So when they see that core inflation ticking up, they're trading based off of that. Now they're hovering under 3%, but remember they were as low as 2.5 as one point. So that means we could, if they stay elevated like this, see a slight increase in fixed rates, not a big jump. Like if you see 399 today, it could be 405 or 41 like later on. So it's not like this massive jump, but there could be a jump, a slight increase, which means get those rate locks in just in case. Also, a good mortgage broker might have the opportunity to buy down that rate back down to where they were previously. So there's still going to be options. So it's not going to be market devastating news if they do go up slightly. But let's take a look at something else here. Oil prices spiked yesterday upwards because of a news headline by Israel stating that they're going to strike Iranian nuclear facilities. Now, if you follow my channel, you know a lot of momentum in the market occurs because of a news headline. There's a shock headline, the investors react to it, it creates this pop, and then it goes back down if that event in the headlines doesn't actually occur. So we're going to be watching this as well. Similar to the bond yields could start tempering back down this week. For the bond yields to have that effect on your fixed rate, they have to stay elevated for a while. Similar to when they go down, they have to stay decreased for a while to affect your mortgage rate potential when it comes to fixed rates. So we're going to be keeping an eye on oil. We're going to be keeping an eye on those bond yields and any other news that comes out this week that can affect inflationary expectations or growth expectations. Once again, no need to panic about those higher bond yields. That small increase in your fixed rate is not going to affect your payment that much.